Hi, this is Mark with your analysis for the week commencing the 23rd of January. I was saying last week that here with the euro dollar I would only be interested to long once price had broken this area here around 35.20 and it did towards the end of last week. So the way to play this if you're trading off a weekly chart is same actually as a daily. We're going to be looking for a pullback with a view to a long, and here you see a little more clearly on the daily chart. This is what I was talking about last week. This was the area, that weekly 200 EMA, and if you look closely here you can see that the candles last week respected each time the different EMAs. They banged into this monthly EMA, then they banged into this weekly EMA. Finally they're clear. Price looks as though when it opens tomorrow is going to be outside the Bollinger Band because it will close like so, and a pullback is to be expected. I am looking for a pullback to 135.30 with a view to a long. Now be careful with the euros because there have been 5-8 crosses on lots of the weekly pairs, which strongly suggests that the euro is going to go up. However, as we have seen in recent months, one bit of bad news and suddenly the euro can tank. My strong recommendation is to choose one euro pair to trade and only be in one pair at a time, or if you're going to take multiple euro trades, then make sure that the overall risk does not exceed your money management. This is the pound dollar, this is cable, and 160 I said to you last week was the important area, and the flipping thing has stopped just below it again. So the way to play it, this was a weekly chart. If you go on to the daily, the way to play a lot of these moves is 4-hour charts. If you're looking on the daily, you can be looking for longs at 158.50 area here. You see that price has been bouncing between these areas, but often on the 4-hour chart gives you a clearer opportunity. So what you could have done last week, you could have shorted at 160, 160, 160, 160, 160, and you could have longed down here around 159. So as you can see, price has been bouncing twixt the two. If you're going to look for a short, then you realistically need to place your stop above the recent highs. Now this is getting higher and higher. I would be more interested to long this pair if we get a decent pullback. So as I was saying earlier, on a weekly 58.40 and perhaps on the daily pullback to 159. This is gold, and I showed you the head and shoulders pattern the other week. We've now broken. The significance for me is this. If gold continues to fall and silver, which it did last week, silver broke through this crucial area, then the Aussie dollar is likely to follow. However, the Aussie dollar at the moment is bouncing between 98.50 and 1,000. Now this was a huge clue during the week. This was Wednesday's candle, and this is a perfect example of a pin bar reversal candle at the top of a move in a highly significant area. So what happened is price burst through because of a news related item, came back down. This was a big clue that the Aussie dollar was going to fall, and it was to do with the trend line as well. There was lots going on here, so this was probably the best trade of the week from a technical perspective. Things to look for tomorrow. Once more, we will be looking for potential shorts at 1,000 and longs at 98.10 area. If price breaks out of an area, then we're on for a triangle breakout, and what I would want with a triangle breakout, I would want price to break and close below 98 with a view to a short, and as I say, watch gold for clues. And for longs, I will want a break and close above 100.20 was the area we looked at before. So bounces back down or break out some pullbacks. So Aussie dollar yen, and Aussie dollar yen, I've shown you in recent weeks how important this area here has been. We had got monthly and weekly EMAs all in this area, and price was repeatedly bouncing off. It has now finally broke through. I would be very interested to short around 81.90 tomorrow, but it may only go as far as 81.35, which was strong recent support and resistance. This is the dollar yen. I trade this periodically. It's very frustrating and has been recently, but look what's happening here on the weekly. We are in still a very large clear triangle situation, and price once more bounced off this upper trend line. And if we transfer that onto a daily, we have a daily triangle. So the scenario is either the preferred method with this for me, to be perfectly honest, I want a breakout and a pullback. So break and close above 83.16, 83.20 area, or a break and close from a triangle perspective. You start looking at this line, but here 81, 85, 8200 has been important. So personally, I would prefer a break and close below 8200 with a view to a short, or above 83.20 for a long. If you're going to trade it intraday, then look on the 4-hour again. This is the 4-hour chart, and it is sometimes easier to play, but it has been up and down, and not the best thing to trade at the moment, I don't think. Euro yen, now we've been looking at this for months and months and months. This is a potential 6,000 pip triangle breakout, which takes you right from the top of the triangle down to here, and price is beginning to break through, and we now need to wait for the end of this week for the month end to confirm this. But we're getting a 5/8 cross here on the monthly, and the last time we had one was way back November 2009. So it does look as though the euro yen is going to turn back up, and I have shown you in recent weeks how we have monthly divergence here. So lots of things to suggest the euro yen is going to go on a big tear back up again. So if that be the case, then what do we look for? Well, once again, we've had a 5/8 cross on the weekly, and as I said to you earlier, don't go mad on euro trades this week, but once more we'd look for a pullback. The preferred pullback would be all the way back down here to 110.80, 111. It may only get to 111.82. The big area that price is going to struggle at is 113. If we're going to get the big move up that the triangle breakout suggests, then you realistically need it to break above here with a view to a pullback and a long. As I say, on the short term, be looking here for clues tomorrow, and if possible all the way back to 111 for a long. This is the euro pound, and we showed you some analysis during the week how significant this 85.20 is, and that's where the damn thing has stopped. This is too messy for me. I would prefer a short. We're still in the long-term downtrend. I would prefer a short. If I was to go long, I realistically want a break and a close above 8600, which is above this weekly 55 and then above the Fibonacci. But at the moment, my bias or my hope, I think, is more than anything that we would get a drop on here. But again, we've had a weekly 5/8 cross on stochastics. It's another one that's messy. The best advice is wait and see what happens and then take your decision. Dollar Swissy. Dollar Swissy is in a clear triangle, and once again, the theory being we are looking for a clear break and close below, or a clear break and close above. So you would be looking above 97 for a possible long, and you would be looking below 95.30, 95.50 area here for a breakout, pullback for a short. Final one is the CAD. The CAD, bless it, we had another one on Thursday. This was a pin bar reversal candle after news. 1000 was the area I was saying to you, and I was saying my stop above here. If price does pull back up again, then that would be the perfect area to short because of the fact of the Bollinger Band, if it stays like it is. And if this Bollinger Band is to open, that gives clues it's going to fall again. Best areas to look for a possible short at 1000 and even better up here at 100.40. If you do short at 100, if the Bollinger stays the same, then you would place your stop above 1065, and you would then be looking for a stop of 70 odd pips for a potential move down here of 160 pips. I do think the CAD will continue to fall throughout the year, and the Bank of Canada have suggested that they want the figure to be around this 1-for-1 area, but they will have to fight it. The market may well want to take this down to 90, possibly even lower as the year carries on. Okay, have a great week. Catch you tomorrow.